He never said specifically in the white paper that he was going to have this, but I believe that it's not an accident that, the halvings have been 2012, 2016, 2020, 2024. The next one's going to be 2028.
Do you think he's Satoshi?
Whales who are not playing trading games. Yeah, whales who say sold a significant position sold, pretty much in September, October, November. Satoshi planned to have the halvings around presidential elections, and then you end up having the bear market during midterms.
Sorry, how is that not an accident? We're back at Consensus Miami. Pleased to welcome back to the show Michael Terpin for the second time in a year. Michael Terpin is the author of Bitcoin Supercycle, coined by CNBC as the Godfather of crypto, and the founder and CEO of Transform Ventures. Very pleased to welcome back to the show Michael and get his views on where Bitcoin is headed next. I'm David Lin.
Bonnie Chang.
Michael, tell us where Bitcoin is headed next, but I'll let you kick it off with Bonnie first. She's got some questions for you.
Sure.
The most timely one is Saylor's pivot. What is your thought? I know you are a big investor in STRC. You talked about that product. We last talked, it was 3 months ago. Tell us what you think.
Sure. I think the pivot, if you want to call it, he says it's an inoculation, is because of where he's receiving his funding now. So originally, and I've discussed this with Michael at length, I've been to private events at his home, and I've always been an advocate. If you want to get more Bitcoin at the end of the day, you should sell at the top and buy back at the bottom, which is where my book has that thesis. My fund has that thesis, and he had told me at the time, and this is probably 2 years ago, that that if he changed his thesis and did anything other than always buy, he can certainly buy more at the bottom, and he has done that. But if he did anything other than buy, that certain Wall Street buyers would think he changed his thesis, and they wouldn't be as willing to just perpetually write checks to him. Now that was when they were writing checks to the preferred shares, the different instruments he had before STRC. STRC now has become really a retail phenomenon as well as institutional. And I think there the main concern is, how does he pay the dividends? 11.5%. I mean, it's almost 3 times what T-bills are, and it's still pretty safe. And I think he's just having to show that if needed, he can sell Bitcoin to pay the dividends, because there's a lot of it. And that doesn't mean, most DATs, when they sold Bitcoin, it was because they had to at the bottom of the market. Their board's in turmoil and crisis. What a stupid idea buying Bitcoin. That's not the case with Saylor or MicroStrategy. They're all firm long-term believers. And his thesis of borrowing at 11.5 and having appreciation of more than 20% per year, still works with the right financial engineering. And so you have to have that little inoculation, as he says, or escape valve, that if all of a sudden you need to go and sell, you can. I just really don't see him doing it anytime soon.
Interesting.
You're on the show a year ago, Vegas, BTC Vegas. You outlined the path for Bitcoin to reach $1 million by 2033. Do you still hold that this cycle will continue, as you talked about last year?
I do. I have no change in the progress to $1 million Bitcoin.
Okay. But short term, you told me offline, you're a little bit skeptical of the price action going forward, upward.
Well, it's really not a change at all my thesis either. We are in the middle of Bitcoin fall. I'd say the one thing that has changed from a year ago is STRC. STRC has a lot of capital driving bigger purchases of Bitcoin by MicroStrategy than you normally would have had in a bear market. I mean, he's raised, I think, $7 billion in one day, ex-dividend day of this last time. I saw him at the Bitcoin conference just this last week in Las Vegas, and he did a special session for the whales after his main speech. And he had said pretty much his thesis is to get to $10 billion a month, and then to $100 billion, and then to $1 trillion, and then to 10 trillion. And that as that goes up, he can buy more and more Bitcoin. I don't know if he's ever going to get to 10 trillion, but he's certainly going to get to 10 billion pretty quickly. And one could foresee someday him getting to 100 billion a month. And that's a lot of buy pressure. So I think what that has done is perhaps put a floor on how low it can go. In February, I thought that since we didn't, hit the 200-week moving average that has always marked the bottom in the past, We came a little short of it. It would have to go below 57K. We went to 60, and then we bounced hard off of it. And the capitulation phase, 3 times out of 3, it doesn't bounce. It just lays there, and people are like running away from Bitcoin for a while.
Just on the floor, we just had Michael Saylor on earlier today, and he claims, correct me if I'm wrong, Bonnie, but that he claims that his strategies buying of Bitcoin does not move the price.
He was very humble about it.
What do you have to say about that?
I didn't say it moved the price the day he buys it, but what I think it does is it puts a floor on how low it's going to go, because I would think that he would buy a lot more if it actually went down to, say, 39 or something like that. And I think that every time he buys it, it doesn't immediately raise the price. It's actually been surprising how little it does raise the price, because he's buying it over time and he doesn't declare it until his Monday when he says how much he bought. And it's OTC, right? I mean, OTC masks a lot of buying and selling behavior. I mean, historically, a lot of the volatility in the era that whales controlled things were that they would, buy things OTC and then they would dump on the market and cause things down and then short at the same time. That's behavior that Wall Street knows how to do, and they've done it in other assets. And I think you can see around the 10-10 scenario that there was a bit of that gamesmanship going on.
How does the volatility of Bitcoin change over time as more whales accumulate a larger share of the outstanding Bitcoin in the market?
Well, I don't think the percentage of whales is going up. I think the percentage of institutions is going up. I do believe, though, that the whales who sold in October, the vast majority of them, are going to buy back the same amount or more, because that's the whole thesis of my 4 seasons of Bitcoin, is that you have 4 seasons driven on fear and greed, and that if you sell at the end of Bitcoin summer, the price is a lot higher than it is at the start of Bitcoin winter. So Bitcoin fall is where all your decision making that makes the difference happens. If you're accurately able to tell the first day of Bitcoin fall, which is the bubble popping, and the last day of Bitcoin fall, which is the final capitulation, you make a lot of money. But if more than 4x per cycle in the last time.
If more institutions accumulate Bitcoin, in other words, let's say Michael Saylor's strategy and other treasury companies like it, if they accumulate a larger percentage of Bitcoin outstanding, doesn't that make the market overall more illiquid and therefore more volatile? Does that make sense?
If they accumulate them as permanent capital?
Yeah.
Because ETFs are certainly not permanent capital. They do move in and out. They move in and out less than say first generation retail does. I mean, first generation retail, which I'd say is the majority of retail buyers of ETFs, are not people who are already on Coinbase. There are ones who are uncomfortable, doing self-custody, buying even on Coinbase, and all of a sudden it's like, oh, I can do it through my Charles Schwab account. And so they bought, and they typically are a little bit less paper hand in terms of selling when the price goes down. They do sell net, but it's been a lower level than, say, 4 years ago, 8 years ago, when it was just people who had heard about Bitcoin, bought because their friends were making money, bought at the top, and then panic sold at or near the bottom. They're still doing that, but in less numbers. Maybe because they call their broker and they say, no, keep this in your IRA for 10 years. And so you do have less selling at the bottom, but you do have selling.
Before we continue with the video, let's talk about today's sponsor, Delete Me. Now, there's an entire industry built around collecting and selling your personal info. Data brokers collect information such as your name, address, and phone number, then package and sell it to third parties. Delete Me is designed to help reduce that exposure. It only takes a few minutes to set up, and they handle all the work in the background. They identify where your data appears, verify those listings, and submit removal requests to hundreds of broker sites. They also keep monitoring, since these listings can come back over time. I've been using Delete Me for over 2 years now, and they have reviewed over 325 listings of my information. This saved me over 12 hours of searching and reviewing it myself. The reports show exactly what was found and what was removed, which makes the process transparent. Scan the QR code on the screen here, or go to joindeleteme.com/DavidLin, link in the description down below, and use code DavidLin for 20% off. Now back to the video.
Saylor is buying at a crazy big amount, and you said it's OTC, so someone is selling. Are we talking about the whales?
Whales already sold. I think what's selling right now, the majority of it, is liquidations. You have an unprecedented number of new ways of of getting liquidated. We didn't have very many perps in the crypto space 4 years ago, and now you got hyperliquid. You've got all these other vehicles where you can go, and you got exchanges where you could do. Well, I guess you had some 4 years ago, but BitMEX was the first one that did 100x leverage. But you have more people using those and using trading bots, et cetera, among retail. And a lot of them think they make some money. They think they're too smart for the room, and they go in irresponsibly long or short, and they get liquidated. And so I say liquidations. You can see the size of the numbers. That's where a lot of the selling is. I wouldn't say most of it, but
you just said whales have already sold.
whales who are not playing trading games, yeah, whales who say sold a significant position sold pretty much in September, October, November.
And you think these whales are trading? They're not hodlers.
Most whales are hodlers, but there's a lot of whales, right? I mean, if you look at the number that's sold, it was still, I don't know, maybe 10% or less of the overall wallets that have been holding the asset for more than, say, 8 years or so, certainly 10 years. A lot of them are ones that just never moved, or they moved once to put it into a SegWit wallet and OPSEC. And so the ones who are trading, there are a number that trade. You can see it on chain twice every 4-year cycle. They go and sell near the top. They usually get a little bit wrong. They usually sell a little bit early, and then they buy back after the bottom's already in. They usually come back a little bit late because they think it's going to go lower. And you saw that very, very clearly in 21, 22. Whales selling at the top and buying back at the bottom.
Last time we talked, it was at around, if I remember correctly, about 60K. And you said we were going lower.
That's correct. That was when it was just you and me in Hong Kong. Yeah. And it was at 60K. It came close to the bottom, but because we have yet, a few things have been consistent across every bottom. And for February to have been the bottom, like Michael Saylor says it probably is, would mean that the majority of things have changed. And usually every cycle, one or two things change, but when the majority change, then you have to really wonder about the cycle overall. And I don't think the majority of things have changed, because every cycle so far, the bottom has taken roughly a year. 4 years ago, it was 1 year to the day. 4 years before that was 3 days off of the year. And the first halving, it was 1 year plus a couple of weeks. For it to all of a sudden be over in like 12 weeks doesn't seem to make a lot of sense. This time-based capitulation usually is necessary for some of the weak hands, but not perhaps paper hands, to finally give up and say, this is not for me. Or for them to bet in the wrong direction because they're not experienced traders and get liquidated. Usually a lot of traders, the first time that they try derivatives, get wiped out. And so the other one is a number of statistics that, just technical statistics that all point toward an October low. One of them is coin days burned or destroyed. That says it's going to be around 42,000 at the bottom. That's been right every other time. And then another one is months after the initial high that kicked off the bull market. So just like we've had 3 times in a row now that from bottom to top, it was 35 months. It was within days, right, of the bottom and then the bubble popping. Similarly, there have been twice in a row where from the initial all-time high to the capitulation was 23 months. 23 months would also put us on October. The only kind of question mark here is whether you count the initial all-time high before the halving, when the ETFs, popped us over the 21 high in 24 because of all this pent-up demand. We went to 73,850, and then we went down at the halving. And I talked about this in my book. I thought that you can't have a new all-time high for this cycle a month before the halving, because that's last cycle. And typically every Bitcoin summer is when you have your first new high, all-time high, and then things just take off like a rocket ship. And in this case, it went down to the halving. And where it took off like a rocket ship was when you then hit 73,850 again in November. So here's the interesting thing. Because we never tested this before, because it's the first time we ever had a new all-time high before a halving, if the 23 months is starting at that ETF month, then 23 months was February. And that matches to where we ended up having the first 60K low. So, I mean, I've been saying consistently that I thought it was about, 70% chance that the bottom was not in yet. I mean, today we actually had the first day we tipped up to 83. I think it's a good opportunity to short. My fund is doing that. But, we're certainly, I'd say right now it's probably more like a 40% chance that the bottom was in, and we're headed up slowly. And so if that's the case, we've got some hedging to go the other direction. We're pretty confident about 2-to-1 odds that we are going lower, and that anything I sell in the 80s I can buy back in the 60s to perhaps the 50s. I don't think right now, the only thing that's changed since February is I don't think we're going to probably go below 40. I think that the buying of STRC is really and the ETFs has really been providing a little bit of a cushion to mean that we don't drop quite as low. And every halving cycle, you've had diminishing returns, and you've also had diminishing losses. And this was certainly the lowest of the diminishing returns. It was barely 2x. I thought it'd be 3x with neutral macro. And then I was expecting that we'd be down about maybe 66%. And so far, we've only been down like 54, I think, or something for the 60K from 126. So I think we'll still get down a bit below 60, but it wouldn't surprise me if it goes down to like somewhere between, say, 48 and 55, maybe even 57. As long as it goes below that sort of like 60K mark in February and touches the 200-week moving average, then I feel like the cycle's still intact.
AI has been disrupting the entire software industry. The IGV ETF, which is a software index ETF, is down about 25% year to date. Mainstream media is writing that anything built on code is being repriced. So can you expect Bitcoin, which is also built on code, to see a similar repricing at some point?
No. Bitcoin has withstood an awful lot of attacks. I don't think there's going to be some version of Mythos that's going to unwind the code in Bitcoin. It just has too much protection behind it. It's not just code. It's code and also all these blocks that have been permanently sealed. So, I mean, quantum, of course, its threat is that it can go in and, figure out, what private key is by just trying, what would normally take billions of years, and that in the future could take a few minutes to go and guess every single variation of like a 45 character alphanumeric string. But I think before that happens, which I believe are still 15, 20 years away, they're going to go after other SHA-256 targets like the defense industry, hospitals, banks. I mean, these are all built on SHA-256. So if you can crack Satoshi's wallet, or you can crack JP Morgan, you're probably going to have to go after JP Morgan first. But, again, with Bitcoin, you have to go out after a wallet at a time. You're not going to crack every wallet in Bitcoin. So it's a very distributed, decentralized system. So I think that it's very possible that you'll have AI crack some significant smart contract, and that will be a crisis that will drive the price of Ethereum way down, and there'll probably be collateral damage on Bitcoin. I would see that as one of the main things that could happen between now and October that would then be your FTX moment. Let's say Lido cracked, right? How much is staked on Lido? And we get sucked out and goes to North Korea. That would definitely cause a lot of collateral damage, and I could see that bring us down, into the 40s perhaps. But without something significant, if it's just a garden variety, hedge fund unwinding, we're probably gonna, probably only go down a little bit below 60, 50s.
That's a very interesting topic, because everyone is talking about how quantum versus Bitcoin, but nobody's talking about Ethereum. Let's focus on that, because a lot of Ethereum holders out there, they have the same question. So do you think quantum computers can crack Ethereum first?
I wasn't talking about quantum and Ethereum. I was talking about smart contracts built on Ethereum. And
Right.
And there
Okay.
wouldn't
Yeah.
be so much.
There's a difference.
There wouldn't so much be quantum. It would be some of these newer frontier models in AI, like Mythos, that they're afraid to release. They think it's so powerful. And now apparently all the other ones have ones that are mythos strength. So if that gets out and it gets into the wrong hands, it could go and find exploits to go in. Look, some of the biggest things that almost crashed Ethereum in the past, if you go back to the DAO, and you had the hacker of the DAO back in 2016. I mean, literally, Vitalik made the decision, along with the community, to roll back the Ethereum blockchain and get rid of that one hack. That was, at that point, it was $60 million. That was a double-digit amount of the entire value of Ethereum. And it collapsed the price of Ethereum from like $30 down to about $6, but obviously it recovered.
Can you explain from a super cycle perspective why Bitcoin stocks, talking about the NASDAQ, and gold have been moving in tandem for the last 3 months? If you look at this chart, for example, I overlaid it with the 10-year yield, just ignore that at the end, that's the orange line. But if you look at the other 3 lines, this is the last 6 months. They seem to have been moving together for the most part.
Well, since the war, though, Bitcoin was flat, and then it moved up quite a bit, and gold really hasn't done the same. So, I mean, I haven't done a day-by-day comparison with gold, but it seemed like Bitcoin was outperforming gold for the first time in a while after the war.
Yes, that's correct. Would that change the narrative of gold being an anti-war hedge and Bitcoin taking on that role?
Not yet.
Okay.
I mean, I think for the most part that, look, Bitcoin as digital gold has been the narrative for many years, and it's still obviously a small percentage of what the gold market is. But it has certain attributes that for many make it, more robust than gold. The fact that its scarcity keeps on going down in terms of supply and demand every 4 years. We're at 0.88, it's going to go to 0.44, 0.22, and gold, they keep finding new gold every year, right? And it keeps around 1.5%. And we don't know if in another 100 years it's still going to be 1.5%. But if it is, that means 150% more gold in 100 years, and only 4% more Bitcoin, and then none.
Would you say that liquidity is still the dominant driver of Bitcoin? I think it was Lynn Alden who brought this to our attention a few years ago when she overlaid global M2 money supply growth with the price of Bitcoin, and there was a very strong correlation there. The thesis being that global liquidity drives capital into risk assets such as Bitcoin. Would that disrupt your cycles thesis?
No, I think for the most part they're complementary. Okay. The global liquidity tends to be driven by presidential elections and policies, and I think that it was not an accident, I say this in my book, it was not an accident that Satoshi planned to have the halvings around presidential elections, and then you end up having the bear market during midterms.
Sorry, how is that not an accident?
I said I don't believe it's an accident. He never put it in. He never said specifically in the white paper that he was going to have this, but I believe that it's not an accident that the halvings have been 2012, 2016, 2020, 2024. The next one's going to be 2028. I don't believe that he planned to have it move out of the presidential years so quickly, because 2016, I mean, if you take away 2016, we've been pretty close to the 4-year cycle. There's never been a 4-year cycle, right? It's a 210,000 block cycle. And the algorithm is supposed to go and make 10-minute blocks, and if they're exactly 10 minutes, you get about 4 years. And they've been, if they're less than that, you adjust the difficulty to make them longer. If they're longer than that, you adjust the difficulty to make them shorter. So in other words, you add difficulty or subtract it to make it easier or harder for mining, because otherwise you might have a 4-year cycle, then you might have a 2-year cycle, then you might have an 8-year cycle. And so that's the whole thing about it. Also creates extra security for the network. I have a whole chapter in my book about mining and the economics of that.
That is very interesting, because then the 4-year cycle is based on U.S. election. So Satoshi planned this around U.S.
I believe so, because U.S. is still the most powerful economy in the world. It affects all the global.
It doesn't matter where this person is from. He realized, or she realized this.
Yes, I think that you could say that Satoshi, whether it's one person or a team, had an intricate understanding of economics.
And predicting that it won't change for the next hundreds of years.
Yeah, and I think that once you get past the first 5, 6, 7 cycles, and you get into the super cycle effect that I've discussed in the book, because right now, even though we're only in the 5th cycle, we are 96% out of Bitcoin. And so, I mean, the most money to be made was in the first cycle when you were able to go in, when you could have mined things at effectively below a penny, and you couldn't have sold them at all until 2010. But if you were a believer in the thesis, I mean, Hal Finney, who received the first Bitcoin, was the first Bitcoiner other than Satoshi to be mining, said, this is interesting, I forget the exact words, but it was something like, this is an interesting situation. This is either going to $0 or to $10 million a coin.
Do you think he's Satoshi?
He's certainly one of the ones who's suspected of being Satoshi. It's still a mystery. There's about 20 people that you have valid reasons to think is Satoshi, and no one has proven it. I think at some point there'll be reasonable proof. I mean, the latest one, of course, has been, Adam Back, but he denies it, and a lot of people poo-poo that one. And I think there it's mainly because of the way he spells things and the fact that he's kind of British influence in his background. And there's a few people say, oh, this thing was in Canada when it was posted or whatever. So I think right now it's still guessing.
Just going back to the market for a minute.
Wow, you're so much fun, David.
Well, we can go back to that if you like. Is the CIA the creator of Bitcoin? I want to know how much of Bitcoin's rise over the last 10 years has been due to fiat debasement and sovereign debt accumulation. Do you buy into that theory?
A lot of it. I mean, you talk about liquidity. There's no greater, creator of liquidity than money printing. Yeah. And when the U.S. prints money, the rest of the world seems to print more.
And that would erode trust in the fiat system. And
it erodes trust. Just like, look, I speak in my book about the commodity super cycles, and we've had really 3 of them in the last 100 years. And a super cycle overall, and this goes back to Elliott and the Elliott wave and what he said 100 years ago almost, and that a super cycle, he has the grand super cycle and little mini super cycles. A super cycle has to be 5 years or more. And it has to have an essential change in the thesis of an asset that causes the price largely to go up. And in the first super cycle in the last century for commodities was gold in the 70s, because you had a fundamental change, 2 of them really. You had Nixon taking us off the gold standard, and then in the same decade you had the re-legalization of Americans' abilities to own gold. So all of a sudden you had a new reason to buy gold, and you had more people who were able to buy. And so that led to a quadrupling of the price of gold, as you well know, in the 1970s. The second super cycle was more broad-based across most commodities that were used in building, copper, nickel, et cetera, in the 90s, because China had hyper-industrialization. And in my book, I discussed that CME had said, I think in 23, that we may be starting a new super cycle based on money printing and monetary debasement, but we're not sure yet. Well, obviously what happened in 2025 is we're sure now.
Have you heard of Neil Howe's fourth turning?
Yes.
So for the audience, just to recap, the fourth turning argues that every 80 years society reaches some sort of institutional breakdown. I wonder if Bitcoin has been rising in the last couple of years as a reflection of the coming of the fourth turning, and is really just an erosion of societal trust.
It's an interesting question. I mean, long before the fourth turning came out, there were a lot of theses about you have to wait sort of like 2 generations before people forget everything and things repeat. In 80 years, has been a lot of times people, disagree about when the 80 years was. Was it, 1929? Was it 1945? When did sort of the last 80-year cycle end? Obviously, there have been dramatic things that have happened every decade for the most part. And from technology, it's been very consistent for the last 5 decades or so that there's been at least one major new disruptive technology every decade. They tend to start taking off in the early part of the decades, and then sort of like the bubble pops at the end. If you look at, just in the last few decades, the internet, kind of the web started in 91, even though the internet had been around as a, DARPA experiment since the 60s. But the World Wide Web started in 91. When I got in like early '93, it was still barely there. I had to, get my web browser from Mark Andreessen's dorm room. Effectively, it was a university project. And by the end of the '90s, you had the dot-com bubble and trillions of dollars made and lost. And so now you go 10 years later to the 2000s, and you had a similar phenomenon with Web 2, right? Social media was nothing at the start of the decade. It was little experiments with this little company called LinkedIn, then MySpace, and by the end of the decade, you had the big unicorns, and and then that bubble kind of popped. Not really, because obviously it kind of went down, and now there's some of the largest entities in the world. But the start of the 2010s, Bitcoin was still very nascent phase. I mean, you could have bought, for pennies in 2010. And then by the end of the decade, it was almost $60,000 by 2020. And so I'd say that this decade has been AI, right? 2022 is when the OpenAI came out with its first commercial LLM, and that broke all records for how quickly a product could be adapted. Netflix had the record for getting to 1 million users. It took about a year. OpenAI took 5 days, and now it's closer to 1 billion. And so it's just been, AI is like the internet has been, percolating along for a long time. I've followed AI for many decades. My younger brother graduated from MIT's Artificial Intelligence Lab, and I thought in the '90s that it was going to take off with expert systems and Prolog, and it never did. And obviously LLMs is what was needed, now agents to really, it's now a vast majority of the increase in value in the S&P.
How does that tie back to Bitcoin? If AI is the new sexy investment, then what is Bitcoin?
Sure. So it's two things. First of all, it's a giant pie, right? And yes, there's a lot of stock market investors now shifting from other parts of the stock market to the Mag 7, to AI. There's a big part of institutional, Sandhill, Road VCs putting 80-something% of their budgets into AI. But these are within defined asset classes, right? And so it's not like gold investors are dumping gold and putting everything into AI. And the same thing with crypto, same thing with Bitcoin. You probably have on the fringe some, disgruntled or just sort of people who've always been diversified going say, hey, maybe this year I'm only going to put 20% into Bitcoin. I'm going to put 10% into AI stocks or into AI startups. But the nice thing is that the monetary supply keeps growing, so there's there's room for everybody to grow as long as you keep on the money printing. I think the other aspect of AI, though, that's interesting is, yes, it probably, along with prediction markets, takes away from some of the dollars that might have otherwise gone into Bitcoin and other crypto projects. But at the same time, there has been, a lot of growth, even in the bear market, in the AI tokens, which are still very nascent. They had a big run up at the end of 24, I believe it was, where they went from, some of them went 100x from October to December, and then the bubble popped on that one. And now they're starting to run up again because they went up, they went down. Since the last 90 days, the Venice token, VVV, is up 500%, went from like $2 to almost $10. You also have, other ones like BitTensor has doubled, and that's still nowhere near its high from the last time. I believe that the AI tokens are going to outperform Bitcoin in the next 3 years, the top ones at least, and that a lot of those gains will then roll back into Bitcoin and increase. If you have new money coming into the AI tokens that's from outside of the system, and then eventually when someone sells, they put it into Bitcoin. And then stablecoins are, again, a massive new force in the economics of crypto. The more that you have people having stablecoins, they're now very easily able to buy Bitcoin, Ethereum, any other token, because they now finally have a wallet. And you've had this mass explosion. I don't think as you know, I was involved in the dawn of Tether when Brock Pierce and Reeve Collins and the team there, Craig, put together Tether in Santa Monica in early 2014. And then they ended up selling it to Bitfinex and spun it off as Tether. Their thoughts in those days was, we're going to be able to go and be able to have a coin that represents $1 so that you can be able to trade between exchanges and not wait 3 days, and we'll make money on interest from banks. That was it. I don't think any of them thought that one day would be making $20 billion a year in the T-bills, right? With 100 employees.
Michael, I'm curious how the future of Bitcoin cycles will progress. If you look at the past bull cycles, each subsequent bull cycle had a lower growth rate than the previous one, from trough to peak. If we assume that this trend continues, does it not make sense that mathematically speaking, the growth from trough to peak should approach zero at some point?
That is correct. That's why the super cycle part is important. So we have had logarithmically diminishing returns, and we've had arithmetically diminishing losses. So your first cycle, which is before the halving, and may or may not be as relevant because you didn't have a halving yet, but from the lowest quoted price, the first sale of Bitcoin for 1/10 of a penny, to the high was 3,000x, tenth of a penny to $30. And then it crashed down to $1, 97% drop. The second cycle after the first halving, you went up 100x from $12 to $1,200, and then you crashed 85%. The third cycle, you ended up going up 30x, and then you crashed 83%. The fourth cycle, you ended up, so 3,000, 100, 30, next number's 10, right? In that sort of progression. And so I was projecting that we would have had a 10x increase from the $8,700 halving in 2000 during COVID times. And, we ended up getting cut short at around 68, 69K. And I think that's because of macro. The bad macro is Biden's war on crypto, the choke point 2.0, and the rapid rise of interest rates. That, I'm surprising it only got clipped by, 20%, but it did. And you ended up having it go up, so it went up 8x instead of 10x, and you end up having this suppressed demand show up at the end of the cycle, the fourth cycle, the month before the halving, with the ETFs going live and us hitting 73,000, which was roughly 9x. And then we ended up having a 75% drop to the FTX lows of 15K. So I projected based on that we were going to go up 3x plus or minus macro. Everybody and their brother thought that with Trump being elected, it'd be tailwinds, positive macro. Unfortunately, they didn't realize that, President Trump has, been great for crypto, but has been chaotic with his communications. And every time he tweets something, you'd think by now people realize that he bluffs a lot, that he just plays, read the art of the deal. He'll ask for one thing and like overstate, what bad things are going to happen to get the midpoint and make it seem like a win. This is very common in politics, but the media and the markets just get freaked out whenever, and you end up having that leading to 10-10. Even though the high in October happened exactly where it had the last couple of cycles, there was another, sort of version of reading the data that said it could have gone another month or two, if there was enough buying demand and if there wasn't the black swan. And 10-10 ended up being that black swan where you had this perfect storm of Trump tweeting, Binance selling like crazy, and then cutting off its market makers' ability to short. They deleveraged them, and so that led to like just a free fall in price. And there was some TradFi coincidences that were going on in terms of like who was shorting what, and what messages they were sending to their brokers that appear that there's a number of people who very quickly acted upon that event and sold very quickly and shorted and really caused that initial drop that started the bear market.
My last question for you is your comment on the 10 a.m. dump by Jane Street.
Yes.
That is what people think happened. I am not sure, and I'd love your opinion on it.
Well, it's been widely reported. I don't have any proof of it, but it's been widely reported enough. It sounded like it probably happened, and it's not happening anymore.
It stopped after.
Yeah, it stopped, right? And prices have gone up since then. But the thesis was that Jane Street was systematically selling at 10 a.m., which is a half hour after the markets open, and then like many short sellers do, flooding the market with like, oh, price is going to dump today because of XYZ news. Well, the price is going to dump because you were systematically selling at 10 a.m. And then they would have shorts in and they would make money.
But is that legal? Basically, it is legal.
Well,
To dump.
if you're not doing it with a commodity, I mean, with a security, Bitcoin is not as well defined in terms of, what you can do in terms of shorting, et cetera. I'm not a lawyer.
Yeah.
And I know a lot of Wall Street banks pay fines and they're a fraction of what they make on the trade. So, all I know is that there's still a lot of games that the whales played that are being played by Wall Street now, or certainly can be.
That argument is, so if we see the inflows of Bitcoin spot ETF, that is what retail investors see. That doesn't equally mean that they're not shorting with derivatives. So that is one of the concerns people have.
Well, look, you have a lot of invisible parts of the market in stocks as well. You have dark pools, you got OTC desks, and historically, the way that the whales would sort of make money in a bear market would be, or in any market, would be they would, buy OTC and then short on chain in a smaller exchange, and the rest would automatically follow, right? Because you have very quick arbitrage between the exchanges, and then at the same time they would have a large short position in, and they would say the price is 85,000. They say they're going to go and short it, that it's going to go down to 75,000. They have enough Bitcoin that they can cause the dump by themselves, and then they buy it back at where they dumped it to, and they also collect money on the short.
Is that why, okay, there are a few people that are very famous on chain for losing money, but I would assume that they're doing something else on the exchanges.
We're talking about Mr. Win. There's a number of people on X who have been, loudly saying they made $1 billion, lost $1 billion, or whatever. So I can't speak to the veracity of their data. I mean, there's a number of YouTubers that go on and actually show their trades, but it doesn't mean they're not doing something other than those trades. So there's a lot. The great thing about the Bitcoin market is that you can see a lot of what happens on chain. Obviously, particularly with the ETFs, a lot of it is behind the walls of CoinDesk, right? I'm sorry, Coinbase, and and also in other derivatives markets that are not showing up on chain because they're trading stocks. I mean, look, this has been common in gold for a long time too.
Anything you would change in your book if you had to rewrite it today? Last question from me.
I would probably go into some more details about what could have happened at the end of this cycle, because I think I probably oversimplified, the most likely scenario being that it was going to go to about the midpoint with neutral macro, which would be about 193. I probably should have put in a few more formulas like the 35-month, and I just didn't want to make it too technical.
All right. Well, I encourage everyone to check out Bitcoin Supercycle and check out Michael's work. Links down below. Also, check out Bonnie's channel. Subscribe.
And yours.
Thank you.